Hello, hello, hello. Okay, this is going to be a very short video on how to use this compounding calculator. First things first, all information displayed is hypothetical, simplified, and only to be used for illustration purposes. In actuality, the daily interest rate fluctuates daily and has on occasion been negative. This calculator cannot possibly account for future daily interest rates. What do I mean by the interest rate? If you see here, I'm using a 1.5% daily interest rate. In actuality, the interest rate fluctuates uh, uh, for each trading day. The lowest that anyone has seen is right around 1%. The highest is around 1.85%. Typically, what I've seen the last uh, as long as I've been doing this is it will fluctuate anywhere between 1.32 and 1.67 or 1.69%, somewhere in between there. So I am using 1.5%. If you use 1.4 or 1.6, the numbers will change. The other thing is these three charts here are to be used as a comparison figure. So this is compounding, and it's showing you monthly what it looks like if you compound your earnings every week. This is showing each week. Again, still compounding your earnings each week. And this chart is showing the same amount sitting in a CD that is earning 1% a month, which is a really good rate right now. But it just kind of gives you an idea. So if I were to put 5,000 here, you see how it changes the amount here and it changes the amount there. After if I take my earnings every month and I compound them, it will end up to be $6,300 instead of 5,000. After 2 months, $8,447, 3 months, $10,061, and after 12 months, $81,969. Again, this is using a 1.5% rate. If I use a 1.6% rate, you see the numbers change. Now it's 98,000. If I use a 1.4% rate, now it's 68,000. So again, this is only for illustrative purposes only, but typically we see between 1.34 and 1.6% rate, and it's generally in between a 1.4 to 1.5 range. Okay? Here, again, it's showing let's change it back to 1.5. And it's showing the amounts weekly. So after week 1, I start off with a beginning balance of 5,000. My 80% that I'm going to get, because IPC takes 20%, I'm going to end up with 300. I add that 300 back into my trading capital. I have 5,300. That next week, I net $318. The next week, $337. The next week after that, $357. The next week after that, $378, and so on and so forth. And after 6 months, that 5,000 has now turned into $19,099. Again, at 1.5% rate. And over here, the same amount at 1%. If you look at the difference here, is that $5,000 compounding at 1.5%, and then compounding those earnings on a weekly basis gets you $81,969 compared to $5,000, which would be the balance on the $5,000 that you put in. So really, you only made $50 the entire year.